All right. Good morning, everyone, and happy new year. My name is Babatunde Bangwe, and I run a leadership and development consulting firm called DBBC Limited. And I'd just like to welcome each and every one of us to this year's economic summit titled Thriving in a Transition Year. Thriving in a transition year. And everybody can say that 2023 is very pivotal, especially to us in this part of the world. So I'm not here alone. I'm also here with a thought leader and a barrister, a learned fellow. Can you say hi to everyone?
Hi, good morning. Welcome.
So together, we'll be leading the conversation with a really august array of speakers and panelists. And we're going to be having a rich discussion on how do we truly thrive in this year called 2023. Do you have any thoughts?
Well, for me, 2023 is a very pregnant year. And, for any business person, it's how do you carry this pregnancy to full term and give birth to, a healthy child, reap the benefits. So this is a good way to start. If you use the analogy of a pregnancy, when you discover you're pregnant, you go to see an OBGYN and, they check your stats, tell you what you need, and then, give you the medications to take you through that 9 months. So that's where we are. I believe that this webinar would position our mind and prepare us for that transition, that ability to thrive in a transition year. But I'm excited.
Thank you very much. Thank you very much. Again, I like the analogy of being a pregnant woman and going through the process of checking with your gynecologist, getting the right drug. So today, you have come to the hospital to sort of check your pulses and see how we can navigate in this very pregnant year. All right. Yes, I can see that all our panelists are here, and I can also see that my Oga at the top is here. But before we start, let's just have a word of prayer. And I'm also going to invite another thought leader, a doctor as well, a teacher, a facilitator, Dr. Dolakwa Tukuru. Just give us the opening prayer so we can go into the speaking. So, Dr. Dolakwa Tukuru, over to you.
Hello, everyone. Morning. Great to be here. Let us pray. Heavenly Father, we want to thank you for this day. We thank you for the gift of life and then for the opportunity of making us to gather together to learn. We pray that all we hear, all we perceive, and all we get to understand will not just stop at the information stage, but you grant us the grace to be able to execute them. We thank you for all the speakers that you have brought our way. We trust that you will grant them the wisdom to deliver that which you have enabled them to acquire all these years. And much more, we pray for all the participants to be able to take advantage of this information at this time of the year, that we may run with it and have results to show at the end of the day. Thank you, Heavenly Father. We give you all the praise. In Jesus' precious name we prayed.
Amen. Thank you very much, Dr. Dolakwa. And it's always important that we start with a word of prayer. Right. So I'm going to welcome our chairman. Is a deacon, leader as well, and a business owner, Mr. Kola Okewo, who will lead us and tell us why we are here and sort of give us an opening. We just welcome Deacon Kola Okewo to give us opening remarks.
Thank you, moderator, and good morning to everyone. We want to thank God for the opportunity for this summit. After the COVID-19 meltdown, this is the first economic summit we're having in TREM. And I hope and pray that at the end of the day, we will all find it impactful and worth the while. Let me quickly run through why we are here. For the benefit of our non-Tremites who are online, BENCO is an acronym for Business and Entrepreneurship Network Committee. It is the initiative of our father in the Lord, Bishop Mike, and the idea behind the vision, living Tremites, wherever they are gainfully employed and since inception dropped quite a lot of programs. We have been having business basis, business advisory, mentoring sessions, and in addition to all this, of the annual economic summit for the church. And this is one of the summits we are having today. Over the course of the time, we have brought in resource persons, great economists in and outside TREM world to enhance and add value to some of our programs. We thank God for the most modest achievement that we have recorded in this regard. And we hope that going forward, it will be much better. The annual economic summit, one of the flagship of our programs, is designed to deepen our understanding of the larger Nigerian economic landscape. It is designed to enhance information flow among participants and identify opportunities in the economy. You will agree with me that information is key, is power. So the critical thing for any businessman is to have the cognizant, the right information so that you can be able to design your business properly. The summit had gone on for some years before the advent of COVID-19 in 2022, which necessitated a global meltdown. And subsequently, the program was rested. In any case, we have started again. And this year's summit, with the theme Thriving in an Election Year, is also intended to further deepen our understanding of the Nigerian economy, discuss issues across the sector of the Nigerian economy, identify threats and opportunities in the economy, and provide solutions, workable solutions for participants generally. Let me just share with us some statistics, since this is an economic summit. According to the Nigerian Economic Summit Group, NESG, in a recent report, the GDP growth rate for 2023 was forecasted to be 2.98%, while poverty and unemployment rates are projected at 45% and 37% respectively. Poverty and unemployment rates are projected for 2023 to be 45% and 37% respectively. These indices, you will agree with me, portends a grave situation for the Nigerian economy. But we believe that the challenges are not insurmountable. We hope that the summit this year will be able to allay some of our fears and provide panacea, the solution to these challenges. Because of this, we have therefore carefully selected our speakers this year, amongst them Nigerian finest economists and resource persons, to assist us in dissecting these challenges and share critical information that will be helpful and useful to us. At this juncture, because of time, let me specifically thank our speakers. Some of them are not new to us. Dr. Ayo Teriba has always been with us. We are having him as our guest speaker this time around. We want to specifically thank you, Dr. Ayo Teriba, and the other speakers for finding time to come and share their perspectives with us on the Nigerian economy. We are most grateful. I would also like to appreciate our big daddy, Dr. Michael Okonkwo, the visionary, for his constant support and encouragement. God bless you, sir. In the same vein, I would also like to thank all our participants from all walks of life for your patience and for finding time to join us online for this summit. I'm sure you are going to be blessed. And I can assure you that we will constantly keep in touch with you to keep you posted or updated with our programs. I commend you to listen with rapt attention to our guest speakers. And I know that at the end of the day, you will have been blessed. Thank you so much for listening. God bless you. Thank you.
Thank you very much, Dikin Kolaka. Well, thank you very much for your opening remarks. All right, so I'm going to be inviting our keynote speaker, Dr. Ayo Teriba. But before I do that, I would want everyone to relax, get your notes, get your pen, your paper, and write out your thoughts and your thinking. So as you listen to the keynote speaker, begin to look at all the things that he's saying, the statistics, and how that impacts on your business. Please, if you have any question, please, you would see on the taskbar, you will see a question and answer icon. Please put questions there so that when it's Q&A, we can read out your questions and allow our speaker as well as our panelists to dissect those questions. So let's go straight into it. I would like to just welcome Dr. Ayo Teriba, and it's an honor again, sir, to welcome you to share the same stage with you. Just a quick profile. Dr. Ayo is the CEO of Economic Associates, which is a leading research and consultancy firm in Nigeria, and their focus is sort of dissecting the economy of not just Nigeria globally and provide and forecast different outlooks. Dr. Ayo has his first degree in the University of Ibadan in economics, and also his master's degree, his MSc in economics from the same prestigious University of Ibadan, where he came out and bagged quite a number of prizes. Also, he had his MPhil from the University of Cambridge, where he was there as a scholar, and he proceeded to do his PhD in applied econometrics and monetary economics from the University of Durham in the UK. Dr. Ayo Teriba holds quite a number of positions. Notably, he is the vice chairman of the technical group on privatization, which helps Nigeria in providing a framework of privatizing our assets. So with a warm welcome, please can we just welcome Dr. Ayo Teriba to start off his session. Thank you, Dr. Ayo. Over to you, sir.
Thank you very much. The chairman of BENCO and members of BENCO in general, very distinguished facilitators, ladies and gentlemen. Good morning. Thank you very much for the opportunity to be a part of this. It is my pleasure to be here again. I have a bit of cold. I hope that doesn't interfere, as I try to make this brief presentation. Can I have the permission to share my screen, please? says I cannot share while the other participant is sharing. Mr. Bangwe.
You can share now. You can share now, sir.
Thank you.
You can share now, sir.
Okay, I'm trying to share. Okay, I'm going to speak on a topic that enables us to connect with the prevailing economic realities. Okay, namely, well, the presentation I shared a few days ago on how to make the 2023 budget more realistic. So I'll be speaking about economic realities, which is what I called the first issue there, 2023 economic prospects in the eye of the storm. So what are the prevailing realities in the world, in Nigeria, in states, and in companies? And of course, by the time you are talking about companies, we are talking about ourselves as well as individuals. So that would be the first issue we will briefly dispense with. The second is how well does the budget either fit into these realities or addresses these realities. And the third is what more could have been done to make the budget more realistic. And I'll close with a few country studies, examples. None of this is going to drag, none of this is going to be long, not like a page on each. Current realities. It's not going to be an exaggeration to say that the global economy currently faces a perfect storm in which we've witnessed food price shocks, energy price shocks, both arising from disruptions to global production and trade as a result of the geopolitical tensions, notably the Russian war against Ukraine. Countries are witnessing levels of inflation that we have not seen in decades. And for this reason, the central banks have felt obliged to add one more mystery to the food price shock, to the energy price shock, they're hiking interest rates. So they're adding interest shocks. This chokes. It chokes businesses, it chokes individuals, it chokes countries. And of course, higher interest rates has meant that some currencies have become weaker. So Nigeria and many other countries grapple with increased devaluation. Well, we've seen lockdown 2 years ago, as the chairman referred to. And as the lockdown was clearing off, these geopolitical tensions. But the news is that, yes, things are tense and everybody's feeling the pinch. But we take comfort in the fact that just like the lockdown, it dragged for nearly 2 years, but in the end, it passed. So it was temporary. And we recovered from it. These two will be temporary. But it's important to note that it is not an easy period for the whole world. Countries are not spared. And if you look at Nigeria in the eye of the storm, we have to grapple with falling revenue. We have to grapple with rising debt costs and dwindling reserves, which meant that the Naira, where the Naira started last year, is not where it is now. And no one is sure what the trajectory is going to be during the year because of weak reserves. We face a situation in which increasingly interest payment by the federal government is consuming all the revenue available to the federal government. And those revenues themselves are declining. The challenge that we will grapple, whether as we look at the whole world or as a country, is what should be done to cope with these difficulties. The government has an opportunity every year to do something through the budget. And so, as we go to look at the budget on the next page, are the right things being done? Are the things being proposed in the budget going to make things better, or they expose us to the risk of making things even worse? That's question of, yeah, you can't wish storms away, but you can soar above the storm. To what extent is budget 2023 likely to help us to soar above the storms? Apart from the country, you have states, 36 of them. In the eye of the storm, they also grapple with fiscal solvency. And for states, the level of revenue available to them determines how much they can spend on physical capital, roads and marketplaces, transit stops, and the rest of it. How much they can spend to support economic activity in their states, how much they can spend to support the livelihoods of the people in their state. So whenever the states are struggling with revenue or with fiscal solvency, you see physical decay. You see economic stagnation, and you see rising misery. So we are in the eye of the storm. We have the states arguing with the federal government about who is responsible for 130 million Nigerians who have dropped below the poverty line. It comes down to government revenue. You can measure GDP, you can measure employment, you can measure poverty. But government's primary tool for making a difference to GDP, making a difference to unemployment, to poverty, is the budget. As the Bible puts it, money answereth all things. If you have money, you can tackle poverty. If you have money, you can tackle unemployment. If you have money, you can push for growth. If you don't have money, you can't do anything. So we should be concerned that things are not easy either for the world, for the country, or for the states. And when you look at companies who are facing drops in revenue, they're shedding staff. They also are enduring a lot in the face of cost shocks, in the face of energy shock, input cost shocks, and devaluation. I dwell on this page before going into the budget to say that this is not the easiest of times. And my first curiosity when I look at the budget figures is, to what extent does it reflect those realities? And I'm talking about just 4 aspects of the budget. Revenue. Government spent 7 trillion. No, government got 7 trillion in revenue last year. And they are projecting that they will get 10.5 trillion in revenue this year. And my word is 50% increase in revenue. When the current administration took over in 2015, the revenue was 4 trillion. It has taken us 7 years to move from 4 trillion to 7 trillion. And you tell me that in the year of 2023, we will jump from 7 trillion to 13 trillion. I say, hey, is that realistic? Last year, we moved from 6 trillion in 2022 to 7 trillion. If we move another 1 trillion this year, we should count ourselves lucky. So I don't think that the budget reflects the reality. It's premised on, we are going to pass a finance bill, and we are going to get more tax here, get more tax there, get more. The people you want to tax, the companies you want to tax, are shutting factories, are declaring losses. The people whose income you want to tax, you have, is it 40% unemployment that the chairman said they have? So you are busy doing Finance Act. By the time you sign the Finance Act into law and you look at the people you were planning to tax, the tax base has shrunk. You are not going to get 3.5 trillion in 2023. That's number one. Number two, the things that government spends on. Last year, we spent 14 trillion. And government is proposing, has announced that they will spend 21.83 trillion. So nearly a trillion increase in 2023. I say, I'm not sure this is realistic. Of these 14 trillion that we spent last year, 6 trillion was on interest payment. So 8 trillion was our total non-debt spending. We spent 6 trillion on recurrent, 2 trillion on capital. So I doubt that we will be able to do much more than that 14 trillion this year, maybe 15 trillion. And unfortunately, we are already budgeted that we are going to spend 6 trillion on debt costs. But the problem, with the budget is C and D, deficits and debt. Revenue and spending expectations are exaggerated. And even with the 10.5 trillion revenue that government expects to make, there's still going to be a deficit of 11.3 trillion. And if you don't realize the revenue of 10.5 trillion, and you realize, for example, 8, as we say, then this deficit is going to jump from 11.3 to like nearly 14 trillion. So government is raising a lot of alarm about the size of new borrowing that they are going to undertake. Nigeria currently owes 44 trillion, at least as of September 2022, we owed 44 trillion naira. And government has served us notice that they will raise 11 trillion in new borrowing, and they will securitize 22 trillion ways and means advances. So government has announced that by May this year, the debt would have increased by 33 trillion, from 44 trillion to 77 trillion. That should worry everybody. Any watcher of the Nigerian economy should be worried by that project. I hope it doesn't happen. Because see, moving from deficits, you can run any size of deficit that is necessary. But what could be problematic is how that deficit is financed. And for 8 years, the current government has run deficits year in, year out, and chosen only one type of financing: debt. And that has led to a situation where at 44 trillion, we generated revenue of 7 trillion and paid 6 trillion of it on interest, and turned around to borrow another 7 trillion to be able to spend 8 trillion. So on 44 trillion, if you didn't increase the debt, you will pay more than 6 trillion next year, because central banks around the world have tightened rates. So the interest rate is going to be higher. Government is projecting 6.31 trillion. Interest payment will be more than 6.31 trillion, even on 44 trillion debt. Now, if you increase the debt by 75% from 44 trillion to 77 trillion, %, 33 trillion is 75% of 44 trillion. Then you will expect that the debt cost would also be marked up by 75%. So if you were at 6 trillion last year, mark it up by 75%, you pay minimum 10.5 trillion on interest. And you can't find that in revenue. I hope it doesn't happen. The alternative, which is where I'll conclude, I intend to connect with the reality that government is not considering. Deficit financing is about the mix, the financing mix. On your balance sheet, you have two types of liabilities that you can issue. You can issue debt, or you can issue equity. Debt is a temporary solution. Debt only postpones the evil day, and debt is costly. You pay interest on debt. Equity is a permanent solution, and you don't service equity. You don't pay interest on equity. The entity that cannot issue equity is the entity that has no assets. If an individual or a company or a state or a nation has national assets, it can issue equity. So it's a puzzle that in 8 years, the current regime issued no equity. They borrowed all the money that is available to borrow domestically. Of the 27 trillion in the bond market, the federal government has borrowed 21 trillion, states 5. But of the 28 trillion in the equity market, the federal government has no issue. All that 28 trillion are private.
It seems that we have lost Dr. Ayo Teriba. We'll try and get him back quickly. All right. We do apologize for that break. We're trying to get back Dr. Oyo Teriba. Some of the issues that he has raised are really a cause for concern, considering where we are with budget. And I'm hoping that we are really looking at some of, oh, thank you, Dr. Ayo is back.
Okay. Thank you very much. Apologies.
All right, sir.
I had to change my source of internet. Okay, but where I left off is, it is true we owe 44 trillion, but we should all ask ourselves, what do we own? And why is the budget not saying anything whatsoever about what we own? I'm trying to share my screen. Yes.
You can share your screen, sir.
Okay. I have. And I'll give examples of the things that we own. We own companies. The companies that have issued the 28 trillion naira of equity is top as the current market capitalization. Nigeria, the state of Nigeria own companies that are potentially bigger, perhaps than all of them put together. But the problem is that none of the companies owned by the government of Nigeria has any known market value. That in itself is a very strong financial disadvantage. And I'll give example. Saudi Arabia facing, drops in revenue, of decreasing revenue because of weak oil price, like Nigeria. In 2016, listed its oil giant, Aramco. So as of 2015, Saudi was like Nigeria. Unless they sell oil, they have nothing to fall. They will go out borrowing. But Saudi established the market value of Aramco in 2019. And was discovered that Aramco was worth $1.7 trillion. And today, $2.4 trillion. It changed the financial situation of Saudi. Their GDP is only 850 trillion. But the fact that the world knows that they have a company worth 2.4 trillion, nobody is looking at their GDP. Saudi is using its ownership of Aramco to penetrate global capital markets on favorable terms. So if we go to raise money abroad now, we'll be paying 8%. Saudi is paying less than 3%. It's not even paying. They will issue interest-free sukuk. They just give the guidance, that, okay, this sukuk will pay you a dividend of US Treasury bill plus 1, something like that. So the profit you make. So they're able to borrow interest-free, and their asset is able to pay back. Nigeria needs to put itself in a similar situation. We own LNG. Let's encourage Nigeria to list all state-owned companies. And then we'll be able to leverage on their value. You don't have to sell. Saudi didn't sell Aramco. It only did an IPO of 1.9%. It still owns 98% of Aramco. And it's leveraging on that 98% to raise money on easy. They owe much more than we owe. They borrow much more than we borrow. This 33 billion that we are saying, trillion that we are saying we want to borrow, they probably, issue that in a year without consequence. It doesn't lead to high interest costs because they don't pay interest. They issue sukuks. We have real estate, and I also give an example. Dubai thrives on real estate, much of it owned by the government. Dubai certainly doesn't own more real estate than we do. But just like we don't value our companies, we also don't value our real estate. So we are rich in companies, we are rich in real estate, yet we go borrowing. Let's talk about our assets. We own infrastructure. When after they did this year's budget, the National Assembly pointed out that there was some 500 billion naira realizable from spectrum fees. Spectrums are national assets in the infrastructure space. So why did that have to be an afterthought? Most other countries will review the fees recoverable on their intangible assets on a quarterly basis. So if you put more effort, you won't have to borrow a dime. What you don't get from infrastructure, concessioning or licensing, you get from real estate. What you don't get from real estate, you get by securitizing your corporate assets. I'm not advocating that you should sell. The wrong word is privatization. It's not privatization. The right word is optimization or financialization. It's to make money from your assets. And the only way you can continue to make money from your assets is not to sell it. So when you're talking of privatization, you should qualify it. Privatization can involve lease of assets. It can involve licensing, renting of assets. Like, car owners can now use their car in their spare time for Uber. That's financializing an asset that used to be for own use. So I'm saying Nigerian government, you look at its balance sheet, stop announcing our weakness. Whenever you say you're going to go a borrowing, you're announcing your weakness. You have borrowed at home to the point that you've lost all honorable borrowing options. You now owe 22 trillion to your own central bank. There's nothing honorable in that. You borrowed above the junk status. And you had that. 3 credit rating agencies have marked us down before the end of 2022. Yet we still came to announce to the whole world that we are going to borrow 33 trillion. From where? Last year, we planned to borrow 2.5 trillion from abroad. We only got 0.5 trillion. So you've lost all honorable borrowing options at home and abroad. And you are still saying you want to borrow. Whereas you can issue equity. And your equity issuance headroom is probably 500 trillion. You go and look, and that brings me to the final part. You can issue equity against your corporate assets, against your real estate, against your infrastructure. We issued equity in LNG, we issued equity in GSM telephony. We can issue more. If you look at countries, India and Brazil are top 10 countries in the world. They have created dedicated portals for attracting foreign liquidity into local assets. India listed 15,000 assets. Brazil too. The figure is, India is looking for 2 trillion. And they are beginning to get 100 billion, close to 100 billion annually, the two of them. Saudi is the newest to join it. What distinguishes these 3 countries is that they have a dedicated portal. When you get to that portal, the only things you find there are projects that either the country or the state wants to finance. And they'll be announcing last week, 30 projects were uploaded. Last week, 50 deals worth $6 billion were consummated. These are countries that are running their budget and their economy from the balance sheet, not from the weak point in their balance sheet, which is debt, but from assets. And they are using their assets to connect to equity. So I'm saying that government portrays a very gloomy fiscal situation, but the reality is different. Nigeria does not need to continue to borrow. Nigeria is rich in assets, but our assets are neglected. And it's only if companies that are owned by Nigeria are primed to the optimum, if real estate owned by Nigeria are primed to the optimum, if infrastructure owned by Nigeria are primed to the optimum, that Nigeria will get revenue. Every one of these assets that you attract equity into will become a new source of revenue for you. Will become a new source of employment for you. Will become a new source of growth for you. So neither Nigerian budget nor Nigerian economy has any future if assets continue to be neglected. So government in the budget has painted a scenario, which is the debt-driven scenario. If they follow that scenario, it leads to doomsday. Government is borrowing at MPR plus 4, 19.5% at home. If government is borrowing at nearly 20%, you can imagine how much the rest of us will borrow. That is the scenario that will continue if they do go on and leave the debt to 77 trillion. The alternative scenario is the asset-led scenario or the equity-led scenario. Every equity that government issues eases interest rate, boosts government revenue, closes the deficit gap. And that's what I call the El Dorado scenario. For 8 years of the Buhari regime, that El Dorado scenario had always been within our reach. But the regime prefer to borrow. And they borrow now, we face a dead end on the debt journey. So if you raise it to 77 trillion, you pay 10.5 trillion in debt cost. You don't even have that as revenue. This is a dead end. In the 5 months or 4 that is left for the government, if they want to do it, they can do it. It's not difficult. I mean, India did it. They started about 6 years ago. Brazil has done it. They started about 6 years ago. Saudi started about 3 years ago. List your assets. It's the most straightforward. It's the thing that is most within your control. And you have to be transparent about it. You don't have to sell. Just financialize them. The regime can do it if they want, but if they don't, as we manage the transition, let's pray that the elections are peaceful. It's an option that is waiting for activation for the next regime. So I understand that the reality is hot, but I'm saying that the difficulties with our budget and with our economy are self-imposed. And the door is wide open for us to change the narratives. And I'm hoping that we'll get the consensus, the conversation towards the consensus going, that we should turn to Nigeria's assets to strengthen the Nigerian budget and to strengthen the Nigerian economy. When we liberalize telecoms, it created jobs. It opened new employment opportunities, new activities. If you liberalize rail, that's one of the assets in the infrastructure space, it will do the same, it will even do more. If you liberalize power transmission, it will do more. Of what benefit is a dead rail sector to us? Of what benefit is, and in a transmission network that is always down to us? We should head away from economic collapse and toe the path of economic revival by attracting global liquidity into our idle national assets. And we'll be happy for it. I thank you very much for your attention, long and short of it. That's where I would like to rest the matter.
Wow, thank you very much, sir. Thank you, thank you, thank you. Wow, 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 wow. Thank you, Dr. Teriba. Thank you. Thank you for that eye-opener and a way forward. For me, one of the key words that I sort of hear in terms of our response to what is ongoing is resilience. And I think that a lot of us as business owners sort of have to build resilience in sort of heading into these headwinds. Thank you very much, sir. Thank you so much, sir. Quite a number of questions have actually come in, but you just give us a few minutes. Let's hear the panelists' perspective to your conversation, and we'll take it up from there. So thank you. So please, can we really celebrate Dr. Ayo Teriba for that eye-opener and very succinct description of how we need to thrive, especially at a macro level in terms of the government responding to some of these things. And again, for us as business owners, I really wanted to think about it, how we need to really become resilient as we head into this headwind. Thank you so much, Dr. Teriba. And we're going to go very quickly as we go into the next session, as we invite the first panelist and my colleague, Uyi, will take over from there. So Uyi, over to you.
Thank you so much, Reverend Tunde. And what an initial consultation that brings in very clear perspective. And I'm sure the other speakers would be fired up by the standard that he has laid. If anything, we need to rethink the way we do things. We need to rejig our system. So at this time, it will be my pleasure to take us to the next session and invite the next speaker who will continue, so to speak, from where Dr. Teriba stopped and give us a new angle to the conversation. I'll be bringing on Mr. John Nsika, who will be speaking to us on scaling your business for global relevance. Scaling your business for global relevance. Scaling your business for global relevance. And great. So we have Mr. Nsika. Just as a bit of introduction, Mr. Nsika is a senior partner, growth and transformation for Teddy Africa. He has left extensive footprints in mentoring business leaders across various sectors, ensuring sustainability and transformation initiatives. He is a tech innovation leader and has spearheaded the design and development of an array of disruptive solutions within the African business space. His focus in the last decade has been helping organizations harness emerging opportunities by shaping their ideas towards collaborative platforms and smart business models that help propel exponential growth. In the last 2 decades, he has served in several executive leadership roles, such as co-founder of PeerPress Africa, Chief Operating Officer of Procentric, Head Innovation, Nigerian Stock Exchange, and Country Manager Elevate. A big part of his focus is in advising local and international concerns on venturing and connecting African founders to funds, markets, partners, and opportunities for growth. I could go on and on, introducing our speaker. But on behalf of the team at BENCO, it is my honor to leave the stage for Mr. John Nsika to take us to the next level of this consultation. You're very welcome, Mr. Nsika.
Thank you very much. Can you hear me?
Yes.
Yes.
Awesome. Thank you. So happy to be here. Thanks to the team from TREM for putting this together. And thank you, Dr. Teriba, for that very insightful and thought-provoking session. For the time I have, I'm not sure that we can exhaustively deal with the issue of scaling your business for global relevance. So I guess what I'll try to do is to, just build the foundation to evoke, further conversations. And I'll just take it from where, Dr. Teriba stopped. Let me just stand on existing protocol and dive right into it. Now, first of all, I'd like to, I've intentionally skipped my content, just to save some time. But of course, if I wanted to go through the short content I have, is just to try to differentiate between growth and scale. Of course, try to speak to different stages, of the people who are in the room, who are connected to this call, because I don't think everybody is at the same position in terms of business and venturing. And then I'll try to speak about the concept of abundance and then zero in on the mindset that enables business leaders to scale for global impact. So quickly, people use the word scale versus growth or scale and growth interchangeably. But in the context of our conversation this morning, it's a bit different. Scale is a bit different from growth. If you put in $1,000, for instance, into your business in terms of, acquisition of business assets, maybe hiring more hands or funding your marketing or anything, and you put $1,000 as input into your business, and you realize $1,200 at the end of the year, you can say you've grown. So that would be growth. But if you put in $1,000 into your business for the same reasons I've articulated, and then at the end of 1 year, you come up with $5,000, for instance, or $10,000, we would say you have scaled because that is beyond growth. So, by way of definition, I'm trying to just unpack this concept. Growth would be when you put in inputs into your business and the output kind of corresponds to the input directly. But scale would be where you have inputs and the output does not correlate with the input in terms of the output is exponential beyond the input. If you look at the picture on your screen, if you have 4 units of effort yielding 1 unit of results, you are growing. And 95% of the businesses I speak to in Nigeria and across Africa are here. But if you put in 1 unit of effort and you're able to get 4 units of results, then you are scaling. And the mindset, the strategy to impact, the world, to have a global impact, must be the one on the right, where every unit of effort yields exponential results. And we are hoping that at the end of this conversation, you'll begin to build the mindset to transition from the left side to the right side, where your efforts yield exponential results. Now, I did say that I don't expect, it's not practicable to expect that everybody on the call will be at the same level. Because if you are talking about scaling your business for exponential growth or for global impact, it means that you have a business that is already doing well locally or in Africa, and you're now looking to scale it, globally for global impact. But I don't think that everyone on the call is at that place where you have a business that is doing very well locally. So I'll try to speak to each category of the people, like broad categories of the people that I think are in the room. The first set are people I think are thinking of venturing or creating and commercializing value. And these people have been thinking for a long time. They haven't done anything. They have all the wonderful ideas in their head, and they are yet to execute. For those people, indicated by, of course, the picture to my far left, I would just say to you, go from thinking to doing. What differentiates successful people from non-successful ones is not ideas really, it's execution. And a good idea executed today is better than an excellent plan executed next week. The market is the biggest arbiter, whether what you are doing will succeed or not. So go from thinking to doing, go from planning to execution. That's all I'll say to you. The next stage are people who have executed. They are trying to achieve what I'll call product market fit. You are still very early and you are trying to see how to position your product or service in the market for profitability. For you, what I would say is let your unit economics make sense. You know, if you have a car that you want to drive and accelerate, the car must at least be moving well before you can accelerate it. If you try to accelerate a defective car, you would mess up the car and even injure yourself in the process. So make sure your unit economics work. Try your best possible to achieve product market fit, and then you can come into the conversation of scaling and acceleration. And there are playbooks for this, which we don't have time to go into. The third set of people would be people that I feel they have a few customers and they are trying to now go from a few customers to a lot of customers, either locally or internationally. These are the ones I would say are in the acceleration phase of their business. And I want to believe that something tells me that most of the participants on this call are in this phase. And for these people, I'd like to say you are in a very good place right now. The reason I say so is because of the kind of funds that are coming into, you know, the venturing space, foreign VC funds, foreign investors pushing funds into Africa and Nigeria. Statistics have it that in 2021, every 2 hours of 2021, an African startup raised $1 million. All right, for 2022, while there was a decline between 2021 and 2022 across the rest of the world, in Africa, there was almost a 5% increase in terms of funding at over $5 billion coming in, you know, chasing African ventures. And so I say you're in a good place because if you know what to do, you can attract these funds. Most founders at this stage always complain. They cannot find investments, they cannot find funds to scale. But the reason is because you're not playing the game right. If you play the game right, funds will chase you. Because these statistics I'm rolling out, you know, it doesn't tell the whole story. More funds are available to be raised than what has been raised. The value that was left on the table by founders who could not raise is more than what was raised. And we're trusting that these founders at this stage, you know, we can extend these conversations to get to the place where they can begin to, you know, be in a place where they're able to access these funds that are available for African use. The last stage, you know, I'd like to speak about, which I feel some people on the call also fall into, is a stage where you are a structured legacy organization, maybe regulated, you know, you've been around for some time, you are stable, you are growing, but you are growing in a linear scale. You are growing, you know, 10, 20% year on year. And you are beginning to realize that with the tectonic shifts in the market, what is happening with challenger startups, you know, that level of growth is no more sufficient to make you save into the future. And you are seeing that you need to build capacity for exponential growth. And what I'd like to say to you is that you must move away, you know, from focusing just on operational excellence and safety to also thinking of exponential growth. And what we've seen work, I mean, there's an expansive playbook for this. But one of the things we've seen work is that organizations like this, legacy organizations, you know, must begin to think of building capacity, you know, that makes them tap into abundance and move away from the scarcity mindset. The scarcity mindset says that, you know, the market is a zero-sum game. There's a specific size of pie in the market. And if somebody else takes a piece of that pie, it reduces the one you can take. That is the scarcity mindset. But the abundance mindset says that the market is, you know, a playground of opportunities. You can bake a bigger pie and you can bake a lot of pies. And you can come into partnership and collaboration with a lot of market participants. Because the more you partner and collaborate, the bigger the pie and the piece of the pie everyone can take. And this is just the framework, for the advice to big corporates to begin to build capacity. If you're a bank, for instance, just give me an example, you can build capacity to partner with some fintech companies, some innovation hubs, some accelerator programs that are building the kind of products and services that your immune system, all right, your corporate risk profile will not let you deal with right now. And that can become your tool for growth and expansion into the future and for global impact, partnerships, collaborations, and synergies. Now, having spoken to, the four broad groups of people I think are in the room, I just want to say three things within the time I have before I shut down. And these three mindsets can begin to build your capacity for growth and global relevance. Number one is that technology is exponential, but humans are not. I'd just like you to hold that thought. Technology is exponential, but humans are linear. I mean, the color to the picture to the right shows, 5 megabytes of RAM being transported by IBM from one location to the other. It cost about $120,000 and needed a jet to be transported. Today, you can have 256 gigs sitting on your phone at less than $100. And this is not just the story about storage. This is the story about exponential technology growth. So even though we've had wars, we've had pandemics, we've had health pandemics, we've had financial meltdowns, the growth trajectory of technology has been upwards and exponential. And if you can put your business, if you're smart enough to put your business on that trajectory and you build business models that leverage that trajectory, you can also build capacity for exponential growth and impact. The second thing I'd like to say is that technology democratizes access and converts scarcity to abundance. This is the second mindset I'd like to leave with everyone on the call. I mean, if you think about it, in the days of Gutenberg, in the days of, in the olden days, people thought that knowledge, was scarce and it was something given to the gods. I mean, given by the gods to special people like Aristotle, and people like that. And people used to travel a long distance to tap into knowledge. But then Gutenberg discovered the printing press, books were printed, and people realized that if you can read a book, you can tap into knowledge. And so we can say that the Gutenberg moment, all right, the printing press, the discovery of the printing press democratized access to knowledge. And it's still a very important milestone in terms of technological development, the Gutenberg moment. Today, we have several Gutenberg moments happening at the same time across different technology stacks. I'm happy that somebody on the panel is going to be speaking about some of these new technology stacks today, as part of this webinar.
Hello?
Can I go on? Oh. Can you still hear me, please?
We can hear you perfectly, sir. Please go on, sir.
Thank you. So all of this, the convergence of all these technology stacks are going to create a world of abundance of access to products, to services. And these are all happening at the same time, bringing us to the time we call the fourth industrial revolution, where we are having over 20 Gutenberg moments happening at the same time. And this will affect the way we work, the way we live, and the way we do business. And it's only business leaders who understand this exponential technology growth and leverage it that will grow into the future and have global relevance and impact. The third thing I'd like to say is that it is companies and business leaders who understand and tap into abundance that will be successful and impactful at a global scale. Now, if you think about it, if you wanted to create, make things float, you are going to study fishes, right? If you wanted to make things fly, you're going to study birds. So if you want to grow exponentially and have global impact, one of the smartest things to do is to study the companies who are already big and globally impactful and see what they do and begin to do it. There's a body I belong to called the OpenExo, and they've done a study of all the exponential organizations having global impact in the world. And they've realized that all these companies share some attributes, and they've identified 11 of these attributes. And they've also implemented these attributes in all kinds of companies. And they realized that any organization that is able to take up 4 of these 11 attributes also begins to scale exponentially. And this is just the strategy to tap into and manage abundance for exponential growth. For instance, if you look at the pictures on your screen, Google are not contributing to explosion in information in the world. It is being said that 92% of the information in the world today was created in the last 2 years. So there's an abundance of information in the world. And Google have said, look, we have set up ourselves as a business to organize the world's information and make it accessible. And as far as there's an abundance of information, it is very likely that Google will still be in business. Airbnb did not tell people to build living spaces. But now that there's an abundance of living spaces in the world, Airbnb would still be in the money because they've set up themselves to manage and tap into the abundance, and they've built a business model around it. Bet Niger, as far as there are young Nigerians who want to hammer overnight, all right, Bet Niger, Baba Ijebu, and the other sports betting platforms and gaming platforms would always be in the money. As far as there are a lot of, merchants who are creating and commercializing value online, PayStack and Flutterwave, who've set themselves up as smart payment processing systems, would always be in money. Uber, as far as the abundance of cars and drivers, Uber is likely to still be in the money. There's a young lady I know who has tapped into an abundance of people who are leaving the country, because we know that there's a lot of attrition in jobs. A lot of people are leaving the country, looking for greener pastures abroad. This lady created a platform. If you want to leave the country, you just register on a platform. When she comes to your house, she buys everything at her price. And because you're in a hurry to leave, you are likely to sell because it saves you the trouble of selling piecemeal. And when she buys these things, she's not going anywhere. She sits down here and sells them one after the other. And she's making a whole lot of money. And that's just tapping into an abundance of people who are leaving the country. So as you look around you, as a business owner, as somebody who's trying to venture, and you're thinking of growth, high growth, and global impact, what abundance do you see? If you can identify an abundance, you don't need to be the one to create it. If you can identify an abundance and you can tap into it, you would be building the capacity for exponential growth and global relevance. Now, I must put a caveat here that the abundance you choose to tap into must be censored by your morality and your spirituality. Now, there is an entire playbook, all right, in terms of how to tap into abundance. And this playbook has been used to scale organizations around the world. I was just listening to Dr. Teriba. What he was simply saying is that there is an abundance in Nigeria, abundance of government-owned assets. And the only reason we are where we are as a people and as a country is because we have a scarcity mindset. And we have not started tapping into that abundance and securitizing those assets, and creating exponential growth out of it. That's all I heard him say. And so this model helps you to tap into abundance and then also manage abundance. I may not have the time to talk about them, but I'll just run through in a minute or two. I guess I have a minute or two to go. Number one is that companies and business leaders that want to grow exponentially must have what we call a massively transformative purpose. You must express your why in a very simple way that people can connect with. They must understand staff on demand. No matter how much money you have, all the people working for you cannot be your staff. The smartest people cannot even work for you. So you must build capacity to tap into external competencies to grow your business. Community and crowd, you must be able to syndicate conversations about your business, even when you are not in the room. You must be able to leverage algorithms, AI, what's happening with new technology to build predictability on some of your systems. Leverage assets, Airbnb is a perfect example of this. You must be able to leverage external business assets as a tool for your business. And you must keep the engagement with your customers, your market, and your stakeholders going if you want to grow exponentially. On the left of this scale, interfaces, the way people connect with you, every touch point of yours is an opportunity to delight your customer, and you must think very carefully about it. Dashboards provide you real-time intel about your business. This is not something you come at the end of the week or at the end of the month to study or to analyze. It's something that gives you real-time intel and something you can proactively respond to in your business. experimentation. You must be able to fail forward. You must be able to do experiments, build minimum viable proofs of any product and service you want to take to the market, and try it out, and then work backwards to build the scale version of the product. Companies that want to grow exponentially know that control and command does not really work. You must empower autonomous teams to be able to take decisions, to some certain level and run forward and run fast. And then finally, we must build capacity for social communications, even in very structured organizations, because this enables exponential growth. Now, as simplistic as this thing looks, there's a structured approach by the OpenExo to unlock the power of this in any kind of business you are running. And because we don't have time, I cannot go into it, but as we go on in the conversation, we can provide some highlights, around this. Finally, as I begin to wrap up, when you solve the scale and the growth problem, you can now think of relevance. Where do you want to be relevant? Is it in Nigeria? Is it across Africa? Is it globally? Or do you want to even go beyond this planet and join people like Elon Musk and Richard Branson, who are even taking their relevance beyond this planet to other civilizations in the universe? You must solve this growth and scale problem. You must tick the growth and scale box before you decide on the relevance box. But my takeaway from this today is just to zero in on what Dr. Teriba said, that Nigerian as a government, as a people, must begin to look at the abundance we have in terms of our national assets, securitize them, and then use this as a tool for growth, even exponential growth. I would like to stop here now. I hope I was able to do this within my 15 minutes and turn it over to the moderator. Thank you.
Wow, thank you, Mr. John Nsika. Fantastic presentation. Yes, thank you as well. Thank you very much, sir, for that very insightful presentation. And like you rightfully said, in the course of our conversation, because quite a number of questions have actually come up for your presentation. Thank you very much, sir. All right, we're going to move on very quickly to the next person, and it sort of fits in hand in glove with Mr. John Nsika's presentation. We're going to, so the first female speaker on this conversation, we're going to invite a beautiful lady. Her name is Sume Crypto, and she's going to be speaking around Web3 and crypto and the NFTs as well as the metaverse, and how that we can sort of leverage. If you listen to Mr. John Nsika's presentation, he mentioned something so striking, which also spoke to what Dr. Teriba said, is that there's so much abundance, but are you willing to explore all of this? And he differentiated between the abundance mentality and scarcity mentality, which simply means that we need to sort of break away from the limitations of our thinking and embrace the possibilities that are around us. So I'm going to read a very brief profile of this fantastic speaker and global influencer. So Sume Crypto started off as a financial analyst and is currently one of the few ladies breaking the bias in the tech and Web3 space. She is the founder and CEO of Felbert, an edutech company that focuses on onboarding and empowering Africans with financial skills. She is the co-founder of NFT NG, which hosted the first Made in NFT themed conference, bringing together international Web3 communities to Africa. And I dare say I spoke at that event for me. And she is the ambassador to Binance, the largest crypto exchange with over $24 billion in trading volume. She's a global influencer, speaker, and she's a preacher of crypto adoption all over the world. So please, can we just make her feel welcome as we invite Sume Crypto. Sume Crypto, thank you for, yes, welcome and welcome. So over to you.
Okay, I want to, sorry.
You can share your screen.
Yeah, that's what I'm trying to do, please.
Okay.
Okay, good day, everybody. Please, I hope I'm audible enough.
Yeah, yeah.
All right, okay. As the topic thriving in a transition year, this is a deep one because last year for us, I'm going to be speaking based on tech and the part I'm in. Last year for us wasn't an easy one because we saw a lot of layoffs from tech companies. We saw a lot of crash, like we had Google laying off a lot of stars. We had Microsoft having issues and everything. But then this is, okay, great. But then this is more going to be a different year because now I'm going to be explaining. I know it might sound like gibberish because everybody may understand what I'm trying to say because the Web3 ecosystem is a new one. Most people don't understand what's going on with crypto. We've heard we are scammers. We've heard is the dark web. We've heard Bitcoin is internet money. And most people don't even really understand. So I'm going to just touch the surface of it. Okay. So the Web3 ecosystem, basically, it deals with tech, but now we've seen the evolution of tech to blockchain technology, and then we've seen Bitcoin, which are digital assets, and they are built on blockchain technology. Here, we don't need the bank, so forget everything you know about traditional finance or regulation, or here in Bitcoin, in Bitcoin money era, we don't need the banks here. We don't need legislators. So the government has limited or even no control of Bitcoin. It's just done through peer-to-peer. Like Reverend Tunde said, I work with Binance. Binance is the very top exchange. And that's what we do at Binance, basically trading cryptocurrencies. So now decentralized finance, what it basically means, let me touch more on blockchain technology. So blockchain technology basically is an open, verifiable network that allows for transparency. What this basically means is that unlike the banks where you can't really see other people's transaction, all transactions are basically verifiable on the blockchain. You can literally check, you just need a wallet address. So how we send money over here, we use what we call wallet addresses. You might see it is plenty numbers, made up of plenty numbers and letters. It's really, really long. So we use, that can be every transaction on the blockchain. So if everything is verifiable. So if somebody, maybe the government or maybe someone is saying they sent money to certain person to certain person, you can just use the wallet address and just check it on the blockchain and everything is transparent. Another thing the blockchain powers basically is cryptocurrencies and NFTs. I don't know, you might have heard of cryptocurrencies. The top leading cryptocurrency is Bitcoin, which is currently trading at, I think today is trading at 20,000 per 20,000 per Bitcoin. So one Bitcoin is 20,000. Then we've heard of NFTs, which are basically digital assets. You might have seen people posting that you can sell your NFTs you can sell your pictures as NFTs. These are just because it's just one of one. So they cannot be two same NFTs. They're always one of one assets. So yeah, cryptocurrencies and NFTs are both powered on the blockchain, which is also made up of Web3. They're all on that Web3. Then I said this, so let me go to the next. So yeah, Web 3.0 basically, still, I really don't want to go deep into technology because then I really don't know if we have more technology-friendly people on here because it's really, really broad and even explaining it, I don't know, but then I'm really going to just touch the surface and really try and explain the one I can. Yeah, so like I said, decentralization, total ownership of assets. We've seen the rise of artificial intelligence. Most of you might know of ChatGPT. You might know of, I don't know, you've seen some companies hiring robots. So there are disadvantages of hiring robots because you might say, oh, they might not do, they might not work like humans do, but we've seen Elon Musk and his fellow tech guys hire a lot of robots, and he's even replacing people's jobs. So you just really need to be familiar with this and find way you might evolve with. You might have seen ChatGPT too. that people have been saying, oh, it might take a lot of people's jobs in coming. Maybe you are a copywriter, maybe you are. So the world is really, really changing. And then if you are not really woke to these certain things, the world might literally leave you behind. And then you just wake up and then you might want to see maybe utilities for cryptos in the normal layman world. We've seen some, I think cryptos now, we have like crypto ATMs. We have different things that we can use cryptos to do, unlike before where it was not really accepted. I know we're in Nigeria and then it's really still new here. And then most people might even ask, oh, are cryptos allowed in Nigeria? But then that's another topic, but cryptos are allowed in Nigeria. The CBN just stated that Nigerian banks should not just, this year, I don't know, Nigerian banks should just not interfere with cryptocurrencies, but then you can trade cryptocurrencies even if you're in Nigeria. Yes, so back to what I was saying. So crypto is the Web 3.0 is the future of the internet. We all know already crypto is the future of Web 3.0. Here we have limited legislation. So a government cannot just come and maybe ban Bitcoin, though we have like several countries fully ban, because there's like half ban and there's fully ban cryptocurrencies or the use of cryptocurrencies. Like we've seen China, we've seen Canada and some other countries like that, while some have found a way to add cryptocurrencies either to their budget planning or to their yearly budget analysis. Like in some countries, like I think America, we pay crypto tax in America is like 10% on profits. If you're in profit, you pay the American government 10% of every crypto profit you make. So we've seen regulators and legislation come in a bit, though it's not fully in like that. So let me come back here. So okay, Bitcoin, the metaverse. Okay. So the metaverse is a very new economy. I know a lot of people here still, it might still seem like gibberish, but please bear with me. I'm trying my best to really bring everything down. The metaverse is a 3 trillion global economy and has really helped. I know we've seen companies like Instagram, WhatsApp, they've all changed their name to Meta, and you're wondering what's happening. How are you telling me that you can use a VR headset or an AR headset and do things? But the metaverse is a different world. So forget everything they've taught you in school. Forget everything. In blockchain technology, is a very new, so just forget everything you know. Forget everything you know concerning the banks and everything. Here is a different world entirely. It seems unreal still, but then as we go further in the world, we'll see a lot of development soon. So the metaverse is an integrated network of 3D virtual worlds. Here, basically, you can't just view the metaverse. They are mainly viewed with VR headsets. I know you might have seen people wear these bogus glasses, what I call it glasses, or yeah, VR is white in color, like it's really big. I know most must have seen people wear that. So that's how to view the virtual reality. That's how to view the metaverse. And in the metaverse, you can have your own identity. So now this is where NFTs come back to. NFTs, like we all know, are non-fungible tokens. So NFTs can serve as, they're like pictures, like you might have seen like strange pictures that look like avatars. They look like, it's more of gamers. I mean, more of gamers will understand this. They look like avatars. They look like animated pictures. Yeah, they're like NFTs. So you can have your own identity in the metaverse. In the metaverse, you can host your meetings. We can also have this type of meeting in the metaverse. We can have different things. You can have your houses, you can have your workspace, you can have your different things, but all are going to be viewed with virtual headsets. It sounds new, but yes, people, and they are not just cheap. I think to buy a land in the metaverse would be like, okay, so in the metaverse, we use what we call Ethereum. So after, there are different types of cryptocurrencies. We have Bitcoin, then Ethereum is the next. Then we have other alternative coins like maybe Solana. We have Dogecoin. You might have heard of Doge and Shiba Inu, all those meme coins and things like that. But then in the metaverse, we use Ethereum mainly to make transactions. So you can't just use your normal maybe USD or fiat. You can't just use your normal GT Bank or FCMB to transfer here. And that's why I was like, forget everything you know about your normal world. This is a whole new world. Even me, I'm saying it like this. I know some people are laughing but it really exists and people really use these things. And we've seen top companies, most A-list tech companies have their presence in the metaverse. So yeah, you use Ethereum here in the metaverse to either purchase NFTs or purchase lands and things like that. Yeah, so yeah, like I said, 27% of Nigerians own cryptocurrency, though it's banned here. Like legislators don't want to hear anything about cryptocurrencies. The government, they've refused several meetings with top crypto leads. We've tried to reach out. They really didn't really want to hear. But then Nigeria is still ranked number 5 in the number 5 list of countries that use cryptocurrency in the whole world. Now, I'm not talking of Africa. I'm not talking of West Africa. I'm not talking of East Africa. Nigerians, we are like, if you even go like to most crypto events or tech events and you say you're in Nigeria or you're from Africa and then you say like you're Nigerian, you're really ranked top because we are number 5. So despite all the legislation barriers or all the crypto barriers, even at a point, Binance where I work, we had a lot of issues before, but then it has been settled already with the government. So we are still ranked number 5 in the whole world. So imagine how many, though it's more of young people, like my age bracket, because I'm more of the younger generation that really use cryptocurrency. But that's why like we do a lot of onboarding and adoption sessions like this. So please, cryptocurrency is not a scam. So if you're in Nigeria here or you are in Nigeria here, cryptocurrency is not a scam. Cryptocurrency is not a web. Sorry, can you hear me? Hello?
So we can hear you.
All right, okay. Okay, thank you, sir. So cryptocurrency is not a scam. So if you can just even tell your neighbors or even help us spread the word as much as we can, because it's still early. Technology is really still early here. The adoption rate is really, really, really low. But then cryptocurrency is not a scam. And then, yeah, as the last year, Nigerian digital economy sector also stated that the digital economy sector has generated 594% of revenue above the 2019 baseline when it was formed. So we've seen cryptocurrency help, like I said, some countries pay tax. So obviously governments have started to use this and adopt in some countries, but then it's still stated here that it's done like this, but then it's not fully adopted. It's not fully adopted. Yeah, so I want to base the opportunities for cryptocurrencies or the Web3 ecosystem here. So you might be saying, okay, I've said all these things, but how can people capitalize on it? Do I have to buy Bitcoin now? Do I have to? First of all, the Web3 ecosystem is bigger than just trading Bitcoin. Most people just think we just trade 247 or we just trade, but then we have actual companies that are here. We have actual people that hire people, mostly remotely. Binance does not have an office. Binance does not have, we operate fully remotely, and we do up to, I think, $70 billion in daily trading volume, $17 billion in daily trading volume. So everything is remotely. So we have jobs available aside trading here. If you're in Nigeria, we've seen the unemployment rates, and we've seen how increased it has been, especially from COVID till now. COVID was a tough year for everybody, generally, globally. And then most people just need an extra skill or an extra something, or maybe you need an extra dollar. We've seen the inflation rate in Naira is not even smiling on anybody. So if you're even earning 1K and above in USD, you are really doing well for yourself. So there are several opportunities in the Web3 space. The Web3 space, so we have either you want, maybe you're tech savvy or you're non-tech savvy. We have developer roles, we have designer roles, which includes UI, UX, designers. We have project manager roles, we have brand representation, we have partnership manager roles, community management roles. So these are like, this is part of the ecosystem. We've seen how a lot of people have been able to transition. Like me, I was able to transition from traditional finance into this the tech space. So it just depends on which type of person you are. Either you want to take a tech skill or either you want a non-tech skill. You can, the tech space is a very, very big space. Don't think you have to be all techy. You have to be, just bring your skills in your normal, in a normal space here. We call it Web 3.0. We've seen the evolution. You might be even be saying, what's Web 3.0 that this girl is saying? We've seen the evolution of Web 1.0 to Web 2.0. And now we've seen the Web 3.0, which is the creator economy. So you can bring your skills here. I really don't want to touch too much because a lot of people might not really understand, but I hope I really touched a lot. And yeah, that's it, please. Done.
Thank you very much, Suman. Thank you very much. I know you were trying as much as possible to pack.
Yeah, because it's really
yes, yes. But a key takeaway for each and every one of us in terms of the terminologies that you use, in terms of Web3, they actually mentioned it, is that it is creator-led. It means that there is a lot of liberty to explore the available tools, create your own economic freedom. So it's nothing to be scary about. Like Mr. Joniseke said, there's so much abundance. One of the things that we need to scale is our thinking. Don't feel that, don't look at yourself, I don't understand all this gibberish. Try to understand the basic concept and utilize your skills in creating economic abundance for yourself. I know that quite a number of questions have actually come up for you, Suman. So thank you very much for that. And I know that whilst we are answering questions, you give further insight and clarification to some of the statements that you have made. Thank you very much.
All right, so then please help me and beg everybody. Please, crypto is not a scam. Please, it's right. I'm a real person. We are not dark web.
It's not. Don't worry, but you would give us further clarification, because a lot of people, I can see Mr. Akionifade here asking for deeper clarification around crypto and the metaverse. So I'm sure during the question and answer, you would give us further clarification. Thank you very much, Suman, as I go to the next speaker. Okay, as we move on in our conversation very quickly, we want to invite the next speaker, someone that I completely respect, and we'll be dealing around this value chain. So the name of this individual is Mr. Robert Ogiri. He's a pastor, and over the last 28 years, he has operated across different organizations, that's from agro-allied to manufacturing to food and beverages. He was the MD. He was one-time MD CEO of Lad Group Limited, a company involved in processing and exporting of shea butter. And prior to joining Lad Group, he was the MD CEO of NFPL, a company in the plantation, refining and packaging of oil palm and its derivatives. And he has worked across different places. He had his first degree in microbiology from the prestigious University of Benin, and he was a university scholar, and he did his MSc in food and industrial biology, microbiology, from the same university as well. He has an MBA in operations management, and he has attended quite a number of local and international programs. He is a certified project manager from the prestigious PMP, and he has a wealth of experience in managing projects. So today, I really want us to really welcome this great mind, a thought leader, Mr. Robert Ogiri, as he continues our conversation in this particular theme, thriving in transition. Yeah. So, Mr. Robert Ogiri, are you there, sir?
Hello.
Mr. Robert Ogiri.
Can you hear me, sir?
I can hear you, my pastor, sir. Please,
Okay.
can we let us see your face, sir?
Yes, I'm trying to do that, you know. I'm going to share my slide actually. That
Okay,
will
sir.
probably make it easier.
Yes, sir.
Can I send it to you?
Okay, yes, you can. You can.
Okay. I will do that just now. Just in the meantime, let me say good afternoon, all. It's been an interesting discourse. I've been following the discussions all through. So all I would just try and do is to just crown it with a little bit of building up on the discussions that have been taken before. Amen. Okay, so. Okay. Okay, good afternoon all again. I'm just trying to share this slide, just a minute. I've sent it to you, you've seen it?
Yes, I have.
Okay, so just help me, please. Okay. So you can start the slides. It's all good. Thank you. Okay, so I'll be speaking on the entrepreneur's journey, and of course we are looking at transitions. I mean, transitions can be also disruptions, and for an entrepreneur, and I believe we all. I'll be talking to aspiring entrepreneurs. I'll be talking to people that have started and maybe slowed down a bit due to one or two issues and situations. I'll be talking to those that are just about to, and they are thinking, what do I do next? How do I go about this? And I'll be coming at this from a value chain perspective. And we will basically look at the opportunities that are there for us to take. We look at misconceptions that come along with when you have opportunities like this. So the first thing I would say for every one of us that is looking at, and I will do it pictorially, you know, looking at what next, what do I do? You find out that first thing is that everything must start small. Yeah, you must come to the point where you realize that all things start in small beginnings. You know, we do not despise the days of small beginnings. It will move from where it is and it will become big. The second thing is we must keep showing up. You know, we must keep showing up. You know, sometimes it's going to be good, sometimes it's going to be tough, sometimes it's going to be challenging. But hey, we must show up all the time. Next slide. We must keep showcasing what we have. You know, there must be a consistency. We must keep showing up to do what we want to do. We never give up. We must never give up. When there are a lot of opportunities, we can never give up. The third slide also talks to us about the fact that we must continuously improve. And you know, Insisak was talking about this in citing opportunities. We must begin to see that it's building block. You know, the Kaizen philosophy, one block after another. We keep getting better. We keep building until we get to the point where we are where we want to be. And really, there's no point of there's nowhere you get to where it's where you want to be, really. And that's one of the myths we will address when we talk about for those of us that do what we are doing. Secondly, we must realize that in whatever we do, we must have a process mindset. It's not just about the goal, it's not just about the system, it's both of them working together. As you build those blocks, you must put a process on it. It must work whether you are there, whether you are not there. That operating procedure, that system must work together. And as it works together, you see the steps on the ladder become smaller. You now have a competence. People can now identify. They can now say, oh, Mr. This or this company is very good in what they do. This company has competence, it has skill. Oh, you are looking for this, go to this particular person. So you see the line in which it follows. Then you get to a point where you have a skill set. It is easier for you to climb to the ladder. After that, you'll be talking about success. That is where we come. We celebrate each other as people that have taken the plunge, people that have seen opportunity and have decided to harness it together. So I'm going to start my discussion from where Dr. Teriba he took us, and I'm not going to give you economics. I just want to highlight two things for you in this in the 2023 economic outlook. Number one is that the GDP will grow 3.75%. Now, please note that the World Bank, the IMF, everybody has given a negative outlook for 2023. In spite of that, we are having a growth of 3.75%. Yeah, we know it's a projection, but it's a projection that is nice. At a point, Nigeria was having 8%, 9% growth. The second thing I want you to look at is non-oil GDP. Non-oil GDP is 214.05. Keep that in mind. I want you to keep that in mind. And note that nominal GDP is 225.51. And non-oil is contributing to 14.05%. When I was growing up, everybody wanted to go to the oil sector. Everybody was talking about oil and gas, oil and gas. Hey, let me shock you guys. Things have moved. I mean, you heard that talk about crypto. You heard that talk about financial knowledge. You heard that talk about interesting things and phenomena that is happening. Next slide, please. Now, we want to take this 2023. We want to look at 2022. Now, a lot of things happened in 2022. Some of them will take us into 2023. Should we look at it as negatives? No, we should actually look at it as, in a way, helping us to achieve what we want to achieve. We have a situation where we had cost push and demand pull inflations. We had economic growth that relapsed. We had fiscal and monetary policies that could not even contain the inflation pressure. You have interest rates going up. So you have a lot of things, and of course, security challenges and a lot of issues that are taking place. But look at 2022 now in perspective, in terms of numbers. Can we go to the next slide, please? If you look at 2022 in terms of numbers, this is 2022 in terms of number. Hey, guess what? There were 3 growth areas. In fact, the oil sector that didn't grow. You have a 1.8% growth in agric. You have a services that gave us a 7.1% growth. Then you have a non-oil sector, and that includes things like telecoms and law, that grew by 5.1%. And that is the thing about looking at negative narratives. In all of that narrative, there will be positive indicators. There will be positive points that you can clearly identify. Now, come with me. Come just look at the sectoral performance below. Look at the sectoral performance just below it. What does it tell you? What was the highest contributor of GDP growth in percentage? What had the greatest share of percentage in GDP? Guess what? It's agriculture, 25.2%. Next to it is ICT. You know, she was talking about finance, she was talking about crypto, ICT, communications and technology. That is basically driven by a telecoms company. After that, you have wholesale and retail trade. Then immediately after that, you have manufacturing. So if you take the major drivers of GDP in Nigeria, you have to count those 4 legs. You have to count agric, you have to count ICT, you have to count wholesale and retail trade. Then you have to count manufacturing. You have to count manufacturing. You see it there, 9.1%. Now, if you do a trend over the last 10 years, if you do a 10 years trend, you will find out that even though Nigeria is a mono economy, even though Nigeria depends on crude oil, 25% on the average of our GDP comes from agricultural contribution. 25%. In the last 10 years, the only time it dropped slightly was in 2014 and 2015. Now, if we take agriculture and we want to say, what is it in agriculture that actually drives, that actually propels Nigeria? You go to that slide, major drivers. 89% of the contribution to that 25% comes from crop production. Crop production, 89%. Now, there are opportunities in the other areas, in the areas of fishing, in the area of livestock, in the area of forestry. But guess what? 89% comes from crop production. Are you surprised? Next slide. Don't be surprised. The next slide, what you see, I mean, look at what I've showed you in this next slide. This is your country, Nigeria. It's the largest producer of rice in Africa, 14th in the world. We are the largest producer of cassava in the world. We are the largest producer of yam tubers in the world. We are number 4 in terms of cocoa in the world. And it's Nigeria's leading non-oil export. We are the 5th largest producer of vegetable in the world, 16.4 million tons every year. We are the 11th largest producer of maize. We are the 3rd largest producer of granules. We are the 3rd largest producer of sweet potato. We are the 2nd largest producer of sorghum. And in terms of cotton, we are among the largest producers of cotton, the 13th largest producer of cotton in the whole world. I'm not talking of Africa. I am talking of in the whole world. So what does that say to us? What that essentially tells us is we need to ask ourselves some questions. Now, mind you, note that non-oil GDP is a major contributor to nominal GDP. Note that. And note that Nigeria GDP 25, that means a quarter of the money that you can make in Nigeria comes for you being involved in a value chain. The value chain of the largest contributor can make you money. The value chain of the largest contributor. So we need to ask ourselves some questions. What are we creating right now? What are we doing right now? Are we still relying on past experience? I'm very sure that data I sent Must have shocked some people. Like, really, come. I have not mentioned ginger. I have not mentioned hibiscus. I have not mentioned onions. I have not mentioned cashew. I have not. My slide could not contain it. So are we relying too much on past experience? Oh, it's only when I do something that is related to the oil sector, I must move and do something related to this. That's the old way of thinking. Now, we need to absolutely try new things. We need to evolve or we remain stuck. And so, therefore, we must look at opportunities that can come to us from all of this area. How can we benefit from it? Is it a new startup? Is it what we are doing before? Is it an opportunity that we need to harness? Because no matter what happens, 2023, the country is going to make money. And a fourth of that money will be linked to something that has to do with agriculture. The first area of opportunity you should think about is where there is a demand and a supply gap. Anywhere you have a demand and supply gap, there's opportunity to make money. I'm going to give you 3 examples. Just examples. There are a lot more, but just 3 examples. In Nigeria today, based on a population of 200 million people, there is a 1.3 ton gap in oils. And when I say oils, I'm talking of soya oil, I'm talking of palm oil, I'm talking of any oil you call, you talk about. We can only meet 1.7 million tons, and we need 3 million tons per year. There is a gap in that space. Apart from that, there is also eggs. I mean, believe it or not, do you know how much we spend importing eggs? So no matter how many people you see that are doing something related to poultry or something, there is still a gap. We are the 51st largest importer of eggs because there is a gap in demand and supply. There's a gap in livestock feed. So we can't feed our poultry, we can't feed our pigs, we can't feed our animals because there is a gap. In spite of the fact that we are producing maize, we are among the largest, we still import feed into this country. We will just take some snippets afterwards, but this is just a snapshot. Value chain addition. You must look at the value chain end to end. Guess the 3rd area in the GDP, contributor of GDP, wholesale trade and services. Wholesale trade and services. So you must look at the value chain end to end. Where can I play? Where can I come in? Where can I bring a value addition? What can I do? Is it a storage? What can I do? Last year, I was getting calls. People were asking me, they need cold room storage. There is none. There is none. There is a gap. So the people that had, they just doubled their prices. Import substitution. Import substitution. I mean, all you have to do is, look, a lot of companies are feeling the heat. They buy raw materials from outside the country. Do we have cheaper alternatives in Nigeria? Can you source? Look, there's a company called Satri. Satri is supplying Sobitol to Nestle and to multinationals in Nigeria. They are producing starch out of cassava. They saw that need. Now, a lot of people have stopped. There are companies that have taken maize and they are doing cornstarch. I worked on a project that replaced butterfat with soft palm stearine. We got soft palm stearine from Presco. And it replaced, the company was spending dollars importing butterfat. Yeah, guess what? Soft palm stearine could do it. And it was available locally. It just needed somebody to think through that space, using sorghum extract to replace glucose. Every confectionery they produce, biscuits they produce, every drink they produce requires glucose. We have sorghum. We are the 2nd largest producer of sorghum. So you can do import substitution. You can talk about cost reduction. I met with a group of people last year, and they said to me, look, we are spending so much money buying flavors. We use flavors in our raw material. And we use avocado oil, we use papaya oil, we use oil, and What the white man does is just take this product, extract the oil, and send it back at exorbitant rates. That can bring cost reduction. We have 3 companies, local companies today in Nigeria that are producing ethanol from molasses. We have the molasses in Nigeria. Do you know how much we spend importing ethanol into this country? That's an opportunity. So you look at import substitution. You look at export. We just talked about commodities, pre-processed or not. Just think Africa. Just think Africa alone. Think Africa alone. Think Nigeria. Put Nigeria in the African space. You don't even need to export to Europe. There are countries even within Africa that need what we have in Nigeria. Non-oil exports increased by 41.8% in Nigeria last year. Non-oil exports. So it means that people are harnessing the opportunities that are inherent. Then we talk about innovation. Local brands. There's a company in Ekpe now that has taken fish to a different level. They have machines for fish coming in different points. You go to modern trade, they are selling it. I had a friend, we have the shoreline all across. Yes, we do not have mackerel. We do not have mackerel. But we have indigenous, we have our own species of fishes. Who says we can't can it in oil? Who says that cannot be your geisha? And what will drive this? Look at what is driving the demand-supply gap. It is estimated that by 2100, Nigeria will be the 3rd largest population. Already, it's been a mark that we are 219.7. What will they eat? What will they wear? What would these are? That already creates an automatic demand-supply gap that can be harnessed. Remember that population, that number alone creates an opportunity that is the opportunity that telecoms are grabbing. Next slide. This is what tells you a picture of the demand-supply gap. Look at what I call value chain. This is a value chain. From beginning to the end, whether it's a collector, whether it's village-based, traders, logistics, processor, manufacturing, packaging, retailing, brands, or export. This is a value chain. For brands can be marketing, it can be advertising, it can be anything. Export is there outside. Retailing is there. It could be creating small hubs for products. People have things, they don't know how to move it. It might be creating social media impact for retailing. It can be helping someone package. It can be doing something in a better form. That is harnessing the value chain from raw material procurement to storage, to production, to expansion, to retail, to haulage. That is value chain that can be harnessed. And any opportunity can come from anywhere in it. Anywhere in it. There is a value chain that can be gotten from refrigerated trucks, movements. There's a value chain from adding a benefit in terms of storage to a pre-processed form and just reselling. Think value chain. Our mindset has to change. This is import substitution. You can change import substitution. People searching for local alternatives. People are looking for local alternatives. And this cuts across everything, to biogas, to grinders, to mobile fuel outlets. Who says you can't take your restaurant to the next level? Who says you cannot have a franchise locally? This is innovation. I came across this in the outlet, more mix. This more mix, no need to boil, cook. Just pour this thing into your container and your more is set. This is Obe sauce. It's a big egg boy of mine that has been doing Obe sauce. He's a major supplier to militaries. He has Obe sauce. This is innovation. Look at innovation. Nigeria is the 14th largest producer of tomato. Why do we import tomato paste and ketchup? Look at what you can do. See, Some of these products, these are supermarket products in Nigeria. Kilishi is being packaged now. It's coming all the way from the north. It's packaged, hygienically packaged. Caramel popcorn, cashew nuts, packaged, Ofio, tiger nuts, drinks. These are harnessing opportunities. Opportunities lies in the place where the complaints are. Nigeria is not good. Nigeria is dead. Nigeria cannot work. People are smiling to the bank. This is Jack Ma. Next slide, please. There, who says you can have an African snack box that has dankwa, tiger nuts, kuli and coconut balls, millet, kunu. So you see, these are innovative. This you see, beauty products, shea butter, bitter leaf. I stumbled on Ogbono. It's been sold at $56 in shops abroad. They are calling it America's new discovery for weight loss. Our product. The truth is that I checked on the Global Innovation Index. Nigeria is 114 in the world in terms of innovation, despite our youthful population. And African generally, the first country from Africa was South Africa, and they are 58. What does this tell us in terms of our thinking out of space, out of the box? He said, in terms of us generating ideas, we need to do better than this to drive that next innovation into the next space. And there are myths we need to avoid. People say, risk. I'm telling you, entrepreneurs don't take risk. They do the opposite. When you start off as an entrepreneur, what you have set out to do is to checkmate risk. The myth that entrepreneurship is risk is wrong. The actual risk is the person that is relying on a monthly income in an economy that is shrinking. In an economy that cannot guarantee a stable paycheck. That is the risk. And we as entrepreneurs can get rid of that risk by having more control over our future. Another myth is failure. You will fail. We will fail if we start. What about if we fail? What about if you don't fail? In fact, failure is one of the best ways to learn. Failure pains you more than success. The next thing is, you hear people tell you 9 out of 10 businesses fail in the first year. That thing has so been ingrained in us that you just talk, I want to start up something, 9 out of 10 businesses fail in the first year. 9 out of 10 businesses fail. It's not true. I will show you data to prove it's not true. People can leave their businesses, might not be because they failed. Look at the survival rates of businesses from 1994 to 2015. They did not fail over 1 year. They did not fail within the first year. They didn't fail within the first year. So that conception is totally wrong. Oh, if I start now, people will fail. Oh, they will fail. No, it will not work. No, it's not correct. Go and do the check yourself. Another myth is focus. You focus. Just focus. Focus. If every business focus, they won't do well. Look at the businesses in the world today. They are not focused. They are thinking differently. They are expanding. Amazon started as a bookseller. They are into everything now. Richard Branson started with a magazine. He owns an airline now. Google makes 99% of its revenue from advertising. They are into self-driving cars now. So what am I saying? What I'm saying is you can start a business with a particular idea, but you have to now think above that. You now need to think what's happening, what's going on. How can I add value to what I've started? Or competitor will come and just take it over from you. You can start something small, but you must evolve. You must think. You must start doing something big. You must start doing something. Look at what you are doing and don't rest. And so it's not about focus. It's about where are the values I can add to what I'm doing that can benefit people. I'm doing something in one way. Can I try it in another way? Oh, I'm producing juice out of orange. Oh, can I try different flavors? Can I give different offerings? So it's not about focus. Actually, the world today it's a divergent view. It's a 360 degrees eye view. So what I've tried to do with our discussion today is to see that we get these 5 things out of this talk. It's a long game. You need to set realistic timelines. You must meet local needs, but with a global mindset. You must think West Africa. You must think globally. I was looking at multinational corporations in Africa. Guess what Nigeria is exporting to Africa? With banks, it's banks. Apart from Dangote Cement and Globalcom, South Africa has 58 companies that are operating outside of South Africa, within Africa. We had some here. We have Tiger Brands. We have Promasidor. We have ShopRite. We have Spa. All those are brands out of South Africa. We need to get to a level where we've gotten things and we are moving into West Africa. We are moving. Who says one of the people listening to me is not the one that will take it? And develop markets out of Nigeria. Transition is coming. Yes, elections, census, Naira, you must embrace it. And look for the connecting dots. Look for the dots. Look for the connections. As far as we have the population, Nigeria is there to be a market that nobody can ignore. You should not ignore it. Embrace disruption. Embrace transition. It will pass. And you need to strategize, not just for yourself. You must look at who those customers are. Who are you reaching? What would they think? What would they want? What will be their next level? You need to be an impact-driven entrepreneur. What happens beyond me? What happens? The mindset God has given us is a generational mindset. It is not business as usual. It's not me and my family. It's me and the world. How can I reach out to people all around me? And as a last slide, remember that sometimes the road is not straight. You know, you want to go this particular way, but God's plan for you. You might eat patches. You might eat rough edges, but look, you have wins all along the way until you get to your destination. So don't give up. The opportunities are there. There's a company called Relief. What did they do? They embraced technology. All they did is to do mobile processors. They are doing mobile processing. So they are working with small holders, oil palm owners. And what they did was they got funds from abroad, and they are providing milling technology, mobile milling technology for small old farmers. They harnessed the value chain. They are making money. They are making money. So I would, this is my slide. I would, I pray God will give us grace. I mean, within the time constraint and the limits, I gave a snapshot of, and this is just to instill in us. This is just to, I'm trying to stir up in us the entrepreneurial drive. I'm trying to stir up in us. Don't give up. You might have tried and you stopped. Man, stand up again. Move. It's all there waiting for us. If we do not move, others will move ahead of us. It's there for the taking. Is there for the taking. I that I'm talking to you, I've had 4 startups. I've had one that didn't do well, not because it was not, it didn't have the right strategy. It's because the person that we put to edit messed up, and we're trying to get someone else, you know. But we have things running. We have things running. We've taken opportunities in this space. So I'm not talking theoretical to you. I meet with people a lot. I consult. I meet people. We do things for people that are working in this space, and people are making money out of it. So I want to stir up in your spirit. Don't fold your hands. You know, you need to get your hands dirty. You need to read. You need to begin to look at those opportunities. Begin to look at this particular product. Study the end to end. Study the end to end and see where you can play. See where, the moment you start with one, you will see that it has it has a replicative impact on 2 or 3 others. You've started in the game. You've started. God will help us. Thank you very much.
Wow. Wow, 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 wow. Wow, wow, wow. Thank you so much, Pastor Robert, for giving my main man. Thank you very much, sir. That very insightful, thought-provoking presentation sort of ties up everything that we've had so far. I really want to really profoundly thank and appreciate our audience for spending and taking out the time to be part of our ongoing conversation. I know that you have a lot of things. We truly say thank you for being part of what we're doing. So there are a few questions, and I can see quite a number of questions. And Mr. Akinolifade, thank you so much. You've really been bombarding us with questions, which simply shows that you have been following. So I would like all my guest speakers to please on your, if you can, your video, because there's quite a number of questions that have been put out there, and I'll just be reading them one after the other. So please, in answering your questions, Saz and Ma, is can we just sort of, because of time, we'll just have a few minutes left to wrap up this session. So please, we're looking at about 2 minutes each for each person, just sort of give us some insights. So thank you so much again, Some Crypto, Mr. Robert Ogiri, my pastor, and Mr. Johnny Seka. Thank you so much. And Dr. Teriba, I hope he's still, yes, I can see him still on the call. So I would start with a few questions that I have in front of me. And this sort of goes to Dr. Teriba, if you don't mind. So Mr. Akinolifade is asking that what are the implementable initiatives and policies that will unlock private capital and investment for infrastructure development in the face of dwindling revenue and, of course, the debt crisis? I'll read that again if Dr. Teriba is still on the call. I'll say it again. It says, what are the implementable initiatives and policies that will unlock private capital and investment for infrastructure development in the face of dwindling revenue and debt crisis? So Dr. Ayo, over to you, sir.
Well, thank you very much. I apologize. I'm not able to switch on my video.
Oh, no problem, sir.
Okay. Well, the conversation, we are trying to see how we can change the economic narratives in Nigeria. And the government has to be in the driving seat. There's no progress we can make with the economy without the government. The government can either facilitate the growth or frustrate the growth. There's no progress we can make without infrastructure. Whether you're talking of energy supply, that is for fuel, or you are talking of transportation. These are two core infrastructure that has crippled Nigeria's productivity. There's no private solution. Infrastructure is a space that is regulated by government. So it's either you get the government to act or everybody is stuck. So we like to talk about GDP, and the government measures it every quarter and tell us what has happened to GDP. GDP is not the economy. GDP is just the tip of the iceberg. It's like the relationship between GDP and the economy is like the relationship between the river and its spring. So GDP is just an annual measure of what you can extract from your economy. Your economy is what you extract that thing from. So until the government liberalized telecoms, we wanted to make calls, but we couldn't make calls. There were only 500,000 lines. When the government liberalized telecoms, we now have 200 million lines. The same with power transmission. We need power, we can get power. Power can be transmitted. Until government liberalizes transmission and they encourage investors to move in there, like investors moved into telecoms, we will be stuck. Imagine where we would have been if all the lines we have in Nigeria today is still 1 million lines. So that's why I'm saying, unless the government acts, we are all stuck. Unless the government acts, you cannot connect wealth, which is the economy, with output. The same with rail transport. As long as government obstructs the inflow of investment into rail, so he's talking about, our assets. The assets I'm talking about are collective assets. If it works for government, it works for households, it works for businesses. If it doesn't work, we are all stuck. And we'll be talking about poverty, whereas we can be talking about prosperity. So the challenge is, how can we get our government to think assets rather than output, and to see that Nigeria's assets are like talents that are buried. If Nigeria owns gold right now, it will not be glittering. It will be covered with mud. So any assets that we own, whether I've mentioned infrastructure sectors, I've mentioned real estate, I've mentioned companies, are like gold that can glitter, but the glitter is suppressed, by dust that have gathered on it. And so I don't know how soon it will be, how easy it will be, unless we can, we are the government, we are going to vote for them next month. Unless we can get our government to take steps to do what India has done, what China is doing, what Saudi Arabia is doing. However, the people in those countries got their governments to start doing the right thing, some of them after decades of doing the wrong things, the sooner we will make progress. Long and short, that's how I will respond to that question. I don't know if there is any other.
I thank you for that. And I'd like to also throw out, so if Mr. John Isike can sort of speak to it, like a follow-up question to what Dr. Teriba said. So in the light of all of this, you mentioned quite a lot of things about growth and scale and about efforts. If you put 1 unit of efforts in terms of growth, it gives you 4 units of scale and all of that. But you also mentioned about abundance. In the light of if the government has to do, what should us as individuals do in the light of waiting for the boss, for the government to act? What are your thoughts on that, sir?
Thanks for that question. I mean, what should we do? Are you saying what should we do to make the government act, or what should we do while
whilst we're waiting for the government to act, what should we be doing?
Okay, awesome. So it's clear, like Dr. Teriba has said, we hope that one of these days the government begins to do the right thing. They identify our idle capacity and begin to convert and commercialize them. But as individuals, while we are waiting for government to act, as you ask this question, it reminds me of the kind of question that the disciples asked Jesus. They said to him, will you at this time restore the kingdom back to us? And the way he answered them was that it is not for you to know the things that the Father has put in his hands, the times and seasons, but there's something for you to do. While you are waiting for the Father to sort out the things that are in his hands, you shall receive power when the Holy Ghost is come upon you, and you shall be witnesses for me in Jerusalem, in Judea, and to the uttermost parts of the earth. So while you are waiting for God to sort out politics, don't just fold your hands. There's something for you to do. So to your question, what can we do as individuals while we are waiting for the government to be sorted and to bring to do the right thing? Number one, you must understand that you need to begin to create and commercialize value, irrespective of the level. Nigeria is a country where, thankfully, the pastor has dimensioned it, Pastor Giri. Nigeria is a country where there are opportunities on the road, venturing opportunities, looking for founders, quite frankly. Everywhere you turn, there are all sorts of opportunities for venturing. People just need to understand that venturing is a discipline, and they must understand the rudiments so that they can begin to create and commercialize value. Like my dear friend Somi said, we are top 5 crypto globally. I mean, that is something that is happening, the blind spot of the government. While the government said banks cannot facilitate crypto transactions, it doesn't stop our young people from, if they see value, they consume it. If they see value in teleco, they consume it. If you want to make a call, you make a call to your people in the village. How the voice signals become electronic signals that are transmitted, you don't even have an idea. But you saw value and you took it. You want to take money from an ATM card, that's what you did. How the postilion switches between your bank and the issuer bank and says, it's not your business. So when Nigerians see value, they will, they will take advantage of it, whether they understand the underlying technology, like Some or not. So I'll say that individuals must begin to look around them and understand that there's an abundance of opportunity to create and commercialize value. There's so much you can learn these days. You go online, you go to Binance Academy, you go to Google, there's so many platforms to learn from. Just apply yourself and know that there's opportunity for you to create and commercialize value in your space. Understand 4 things that I will say that will fuel your growth. Number 1, be passionate. If you take away passion, nothing can be done, right? Let it come from your heart, what you're trying to do. Number 2 is the second head, which is the head dimension, right? Learn how things are being done. Get coaching, get support, join webinars like this, get into the places where these things are taught. Number 3 is the hands dimension. Go and execute. The fact that you are passionate and you've learned doesn't help you. Go out there and execute. Try something and fail. You are better off. Try something and fail. And then number 4 is the home dimension, where you join an ecosystem of people like you, so you can get peer support. And there are several ecosystems locally and globally you can join. It suffice it to say, look around you, apply yourself, look for idle capacity, tap into abundance. And if you really want to scale abundance and you're still struggling, come on, get across to some of us. Let's give you some hand-holding.
Thank you so much. I like the 4 H's, and I like the phrase that you use, trade and commercialize value. So much opportunity. Get to the place of re-education. Thank you so much, sir. So to just sort of piggyback on what Mr. John said, somewhere, he talked about finding value, and quite a number of points I'm going to sort of summarize this. Okay, so what really, in layman's language, is the value of Web3 in this day and now? Somewhere. Hello, Somewhere. Can you hear me?
Yeah, sorry, I was trying to unmute. Okay.
All right.
So value, it depends. It's really, I will not say personal. First of all, you have to understand the technology, because like I said, is new, and then is the evolution of technology. Blockchain technology is still very, very, very new. And even us that we are here, we are still trying to understand what works, what doesn't work. There's a lot of mistakes here and there. So I think first thing, you should be open to learn. you should be open to, I know we are Nigerians, we are made to question everything that we don't understand. A typical Nigerian is meant to question, okay, why is technology even technology? Why is Bitcoin internet? Why is it not physical fiat cash? Or why? So basically understand what's the technology on the line, and then explore what you have already. Don't think is a new space, so you are bringing entirely something different here. Explore what you have and come into the space. So yeah, that's it basically.
Okay, thank you so much. So I heard that explore, get your education, learn, understand the technology, and just like what Mr. John said, go through the process, engage by doing. Don't make mistakes, engage by doing and ask questions. Now, someone is asking a question directly to you, and I'm going to go back to Mr. Ayoteriba, is that Mr. Patrick is saying that he lost a lot between 2021 and 2022 to cryptocurrency. So he's saying, I actually want to have an asset there, but then I know that this industry requires knowledge and information to invest right. What's your advice for us who have other things that consumes our time, but also wants to invest in crypto? So your thoughts?
So, yeah. Okay, my thoughts. Okay. Okay, yeah. So basically everything is still learning. Like most people go to other industries everywhere in the world and think they know they have to learn, but when they come to cryptocurrency, they just feel because they buy Bitcoin, it's just meant to go up. Like I said, COVID was a very tough year for all businesses, even us here. Last year was even still not, we did a bit, but then we have what we call market cycles, like even in normal economics. So currently we're in the bear market cycles. You basically just have to know when to buy, when to sell, what to buy. You might have a lot of money. We saw a crash last year, and then a billionaire in dollars went to zero overnight in 2 days. That was the fastest wealth drop in history. So you just basically need to know what to buy, when to buy, where to buy, because there are a lot of exchanges, because you can't use your normal traditional bank, you can't use FCMB, you can't use, but then you can just use it to fund through a P2P. So it's back to education. Yeah, so just take your time. Losses happen. We've all been hit severally here, but then it gets better. It gets better. Yeah. Please don't ever risk what you cannot, not ever risk what you cannot afford to lose. That's another thing. Most people tend to put their entire net worth in crypto, or their house rent, or maybe student. You might be a student, you're maybe collecting money from your parents, you're putting your school fees. Please, what you can afford to lose. Yes, so yeah.
Thank you very much, Some. And another question goes to Mr. Robert Ogiri, my pastor. You mentioned quite a lot of things around the entrepreneurial journey, and you focused a lot on agri. Sort of spotlight on something would be, where do we start from? I mean, I know that a lot of us have spoken about opportunities, but in your own opinion, where should we start from? I know Mr. John has spoken to it. Where we start from in terms of, generally. So if we're not looking at agri, what's the principle from where we should start from in our entrepreneurial journey?
Thank you very much. The principle is basically to look for where you can provide value. You look for where you can have value addition. And Greek was just a pointer, a pointer for me. If you look at the concept totally, you find out that whether we like it or not, and you can get the vibes from the candidates that are coming, that are talking to us in this election. There's going to be less of government and more of private interventions. They're going to allow. They're going to take government out from many things, privatize a lot, and so the onus is on us to immediately look, and it might not just be a Greek. There are different sectors of the Nigeria economy in itself, and you start thinking, where can I add value? start with your immediate environment. Where can I have value? I've told you one of the greatest points we have is our population. I'll give you a good example. Already, there's what is called mobile money, and Nigeria has not yet opened that door. In places like Kenya, Uganda, it's a big deal. It's not yet in Nigeria. Look at the bet industry. Look at how it has grown. Immediate thing is, where is there a lack? Where is there value? What can I create that somebody will say to me, wow, we need this. Wow, we see this. Thanks for bringing this. So you must be able to bridge a gap. Start looking for a gap. One of the first examples I gave is anywhere you have a demand and a supply gap, it's an opportunity for value. And it doesn't have to be agric. It can be anything at all. It can be services. It can be anything. It can be that you notice that in your locality, the furthest supermarket to you is about 3 kilometers, and you can create something. But the moment you study and you see that there's a demand and a supply gap, value can be created there. But the more important thing is to develop a mindset that enables us to see beyond. I hear Dr. Teriba loud and clear, but I tell you something. That has been the mindset that I've heard a lot of people back. Oh, the government has not done this. The government needs to do this. I was involved in the economic recovery growth plan. We were in Abuja for 3 months. Wonderful programs. And this was like 3-4 years ago. Nothing has happened. But there are people in that program that have gotten investment, they've gotten funds, and they've moved on ahead without government. So the key thing for us is look for a demand supply gap. Anything at all. There's a demand, there is no supply, you must fit in immediately. You must begin to provide solution that bridges that gap. And that is essentially a definition of value. In its simplest form, is filling up a demand supply gap. Thank you.
Thank you so much, Pastor Robert. Wow. I'm looking at the questions. There are quite a number of questions here, but I will have to pause here, and really, because we're online and all of that. I'm really enjoying myself and the level of insights. I really want to appreciate all our speakers, from our keynote speaker, Dr. Ayotariba. Thank you always for being part of every time we call on you, you would always come. And Mr. John Isaka, thank you so much. I really enjoyed your session, especially using the EXO model to sort of enable us to begin to think wider with the opportunities that are out there. And thank you so much also for opening our eyes to possibilities and the need to educate ourselves about what is happening in the Web3 space and how it's actually disrupting what is ongoing. Thank you. And finally, thank you, Mr. Robert Ogiri. Thank you so much, my pastor. Thank you so much for also opening our eyes, spotlighting the agri value chain and the opportunities that are there for us and the necessity for us to think outside the box. Thank you so much, sirs. As we wrap up this year's Economic Summit, serious key takeaways for me really would be is to venture out there. Stop complaining. Stop looking at your circle of concerns. There are always going to be concerns, but look at your circle of influence. That is, what can I do? And how can I do differently? Look at the value chain across a particular industry and ask yourself, where do I need to start? Should I start at the end of the value chain or in the middle or at the beginning? Look at what sort of speaks to your passion and sort of domicile there. There. And for those of us who are already running our businesses, there's a lot of money coming in to venture capitalists, and they're looking for the beautiful bride. Make your organization beautiful and attractive to allow free flow of money by structuring your business and looking out for opportunities that are around you. And just like what Mr. John Iseke said, he said, be passionate, which is your heart. learn new things, explore and expand the frontiers of your thinking, which is your head. Get involved, which is your hands. And look for an ecosystem, which is your home, where you can belong to. Look for your own tribe, where you can learn, grow, and find people that can become a sounding board. Remember, 2023 is a beautiful year, right? There's so many opportunities amidst the constraints. Build resilience. Look for new education, re-educate yourself, and more importantly, venture out there. Once again, I really would like to thank everyone on behalf of my chairman of BENCO, the presiding bishop of the Evangelical Commission. I really want to appreciate all our fantastic facilitators, speakers, our panelists, taking out the time to research, to think, and more importantly, to share. And of course, to our lovely audience, thank you very much for staying this long, 3 hours. Thank you very much, and God bless you. So I'll see you with your testimonies in 2024. Thank you very much, and God bless.